Good morning, good afternoon, and good evening, and thanks for joining me again at this hour. You are welcome to the 32nd edition or the 32 edition of Investdata Trading Academy Live with Ambrose. And as usual, before we go into looking at the market condition, we want to look at what also is going on globally and also within our own domestic market. I will say that the market is becoming more volatile, and as you know, this lingering war in Ukraine going to 1 month, you can see how it has changed the face of the market and also economic generally, in the world. You can see that global economy is even shaking already because what is happening in East Europe at the same time, the current change we are seeing in the central bank's monetary policies of the matured economy, as the inflation is also hitting high, new roof. For that, it's going to change everything that concerns investment, and that is why investors at global level, local level are concerned. That's why you can see that the market down here has been in a downtrend for straight, 4 days now as we speak. Why those matured market has also been oscillating up and down for 2 days, 1 day, but our market has been on a downtrend just because what investors are still being careful, sitting on the fence to see what will happen. But I will tell you that as far we are also in the earnings season here, down here in our market, and this is the peak of the earnings season. I will encourage investors or traders that know how to invest using technical analysis. As you are seeing market pulling back, this time you have to use your stop loss. Don't joke with your stop loss, your entry and your exit strategy. At the same time, you have to know have a trade plan, and also you trade your plan as the market unfolds. But the good thing is that our market still remain relatively strong. Why I say relatively strong is that I said it again that in any market we have different phases of the market. We have the accumulation phase, the markup phase, and also the distribution phase before you get the decline stage. Our market has passed through the accumulation stage. That's rally we have seen from January till date. Market has recorded up to 10.39. That's why touching as high as 11.880 before pulling back now. It tells you that the market as we speak at this stage now is at the distribution stage. But once market break down the 47,000 mark, what I always say on this platform, it tells you that the market has entered another decline stage. Decline stage tells you that it's another opportunity for you to enter. That is why as market is in circle, also the economic stage of of any country is also in circle. We have what we call the early expansion, we have what we call mid expansion, late expansion, we have early contraction, and also late contraction. All these phases also go around using what inflation, interest rate, and industrial output. This industrial output, like down here in Nigeria, at the end of MPC meeting on Monday, the committee members voted to retain our rate as our NPR around the 11.50, just to make sure that our industrial output remain positive and start looking up. But because they have seen that the rising cost of production, which is the inflation that we have seen in the last 2 months, is also a threat to economic activities because of the high cost of energy related products like the diesel, the fuel that have impacted cost of transportation and cost of production. These are what CPN or the MPP are seeing in their meeting that made them to retain. At the same time, planning to make what we call kind of intervention to make sure that these products, fuel and AGO, are available because of what's going on in Ukraine and US have affected the distribution of supply chain for us here. I think that's why CPN say they are very ready to intervene so that they can save the economy from going to another recession, because once your industrial output start declining, you are seeing you are seeing inflation looking up again. It's a threat to the economy. I think that is why they decide to retain it, and that is also good for us. I've said it that in anywhere in the world, the whole circular flow of funds, money looking for where you can get higher return. You see that as we speak now, the fixed income market down here, usually the bond market, they can see mixed trend. Why in the treasury market we're already seeing a decline in rates, and these are what also will define where funds will flow to at this time. But also because the economic condition, despite that we are seeing positive GDP figures for the past year, but this year the first quarter that's going to end on 31st, is from here we know whether our economy is on the right direction, because we have seen those records we saw like that, because we are benchmarking our activities against the year 2020, where we had almost a zero base no activities because of the impact of COVID-19. Now that we're going to see the actual movement of economy in this at the end of this first quarter, when we see the GDP for 2022 first quarter around the first week of May or third week of May, that will give us information of about. But don't forget that the corporate action that will, the corporate earnings that will come from this first quarter will already give us insight. And already as we speak now, we're already seeing what we call kind of a market news hitting the NSE and also informing the investing public about the what close period for first quarter result. Why also we are still waiting for those companies that had December year end to release their audited account, because we have seen their own audited account for the month of January, in the month of January. Now, those that have performed well, those that have shown us strength in their numbers, also we expect them to give us the corporate action that will support their price in this season. For me, that's why I say this pullback we are seeing is an opportunity for a designing investor or trader to take advantage in those numbers we have seen. I will expect that their payout will also look up. From the numbers we have seen a good earnings, we have seen a good payout, but market have not reacted to such a company. Tells you that those values we have seen have been factored into this price before this time. As they are hitting the market now, most people are taking a what are taking profit. And it says that coupled with what is happening globally and economic situation as we are at this point now have not supported the market at this season. For me, this is not the time for you to panic, but rather change your strategy. And that is why if you have not registered for the coming master class, this is the time for you to do. Because those sectors I know that despite the expected kind of either is it famine, I'll call it now, or economic slowdown because of what is happening in Ukraine, because many developing economy will suffer from it. Was most of the things they import for their production has gone high, and that will affect most of the economy. But there are some sectors that companies in those sectors have done backward integration, and also because they are not importing most of their raw material, their cost of production will remain a bit stable, apart from the diesel and anything that will affect them. But I believe a company that has potential to sell his price higher, his goods higher, despite the cost of production, will also pass those costs to what to consumers. These are where you as an investor should be looking at, because as they are passing their cost to investors and they are still producing good earnings, that earnings will support their price and also support their high payout. This is how to invest. That's why you need to mark that date, April 2nd, to join us from 9 o'clock to 4. Then at the end, we will know we'll give you hot stock. We're going to invest for 91 days. The minimum return is 25 and above. That is good for within 19 days. And I believe, after the class, you also invite your friends for the next one, because from 2021 started this master class, we have seen tremendous testimony and also returns for investors that have benefited from that class. That I encourage you should make our time and join us in that class. As I was saying, the market has been in a downtrend for just almost a while now. Last week we saw the market was mostly bearish. So because market was mostly bearish last week, and also seeing the trend from Monday to yesterday, we have seen that the market is still depending on that decline. Then what next will you do as an investor? I said earlier, it's time for you to apply your technical tools. That technical tools is what we're going to discuss in this class. How to know a stock that is bound to go up and what's going to go down, so that you know at the end whether you should put your position or not. Also, I always tell you that in combining your fundamental analysis and technical to take decision. You have seen the company earnings as at January, and they produce a good number. As we speak now, the price of the stock is pulling back. You now take your chart to see where the strong support level that this stock will get to, and if it thought there that is going to rebound, and also we are expecting that they're going to do corporate action ahead. So you watch once you thought that support level, the time that you operate, so that when they announce their corporate action in terms of dividend payout, it will put the price up. That's why traders use these two tools, fundamental and technical analysis, because you need to look at what is the fundamental news and you need to represent on the candlestick. If you know how to marry the two at any given time when you are trading, you make a wise investment decision. You don't stay on one side of the market, because you are combining these two analytical tools to know exactly what to do in the market. But before we go into looking at individual stocks and the state of the market, as we want to look at what is the position of this market as we speak now. This afternoon at this noon, what is the market position? As we speak, I will tell you that market is trying to resist decline, despite it's in red marginally. Market has lost about 0.15, which is and that's in points, that's the basic point. But in terms of percentage, it's 0.03. I mean, it's still marginal, and as we speak, why also we are still looking for that this midday afternoon, we expect that more traders or afternoon traders will be coming back to the market at this hour. Once they come between now and the end of trade by 2:30, we have seen the position. But as we speak now, the numbers of losers in the market are higher than numbers of gainers, and that's why you are seeing the market is marginally what in red. As we speak, we have 16 losers in the market, and these losers are led by one Royal Exchange, followed by ABC Transport, FTN Cocoa, FCMB that gained yesterday, and Champs. Then among the gainers chart, just about 6 gainers as we speak now. That means as we speak, market is in a negative breadth of 16 against what? Against 6. Then among the top gainers for this out of this is one is Champion Brewery, Waco, which is Lafayette Africa, UBA, Fixing, and Access. These are the top 5 gainers among the 6 that are leading, that are in the gainers chart at this forward. But don't forget that whenever you look at the market situation, you look at the volume in the market and what are the stocks that are leading in volume. Because I'll tell you that in equity investment, when it comes to technical analysis, your price and your volume give you a lot of information to take action immediately. On that note, you need to know exactly what to do at this time. That is why you look at the volume of what is in the market and what is supporting the market, also volume at the same time. But as we speak now, the top trade in terms of volume are one. First one there is Fidelity Bank, followed by UBA, GT Code, Custodian Investment PLC, and Access Bank. These are the top, top, top trade in terms of volume as we speak now. You see that this also will inform you the kind of market, the kind of state of the market we see now. As we speak, this new market is down marginally, driven by those that high cap like Zenith Bank and GTB and others that are on the loser chart, and also are the ones that are supporting the market in that direction. But I believe as we see more, players or investors or traders coming back to the market this afternoon, we might see market really positive because after market have suffered good decline for 4 days, it becomes attractive for bargain hunters and those that want to trade to take advantage of making 10% or 12% in a week to take advantage of the market correction or pullback. For that, there's no cause for alarm, but rather keep your gaze on those stocks that you have, that the fundamentals that attracted you and the technical position of those stocks are still positive. All you know is just to watch the market. Like I always said that after you apply your technical analysis, your fundamental, the next thing that is very important is patience. And that patience is not that you close your eyes. You take your technical analysis to watch what is the direction of the market. If it's still within the range where you can also wait, but your stop loss will always be there to guide you. This is time for you to exit because when you lose your investable capital, it becomes a story. That is why always in your investment decision, how to guide and manage the risk effectively to protect your capital is very, very key in equity investment. Yes, we are going now back to look at the market proper. But after looking at the market position, we want to consider that of Fidelity Bank, that of Access Bank as we speak now, and that of WAPCO and Fixing. These 4, if time permits, we can do more to know the state of the market and the current position of this stock. I told you earlier that Fixing is among the top gainers. I mentioned them as Champion Brewery, WAPCO, UBA, Fixing, and Access are the top 5 gainers as we speak now. But now let's look at the market proper. This is the chart of the market as we speak. Let's take the chart to a 1-hour chart to give us exactly the position of the market at this hour. Once we get it, we can easily know exactly what we are doing. If you are joining us for the first time today, we'll tell you that this chart we are seeing here, this an hour chart. You can also see the position here that you see the blue line here, you see the red line. The market is below the red line already. For me, it's not a good sign. Tell you that the market is also on the down trend because market is trading below what? Below the T line. T line, as usual, I will say that is the trigger that tells you where the market is in terms of what? In terms of movement. Whenever you see your candlestick above T line, say that the market is still strong. But whenever it crosses the T line down, that is the time you have to be very careful because you want to know exactly why the market is down. And once you cross the T line down, it's time for you to quickly jump out of the position and move forward. But and wait for another cross up for you to buy. That T line is act as a what? As a Fibonacci that give you the position where you should know exactly what to do at that particular time. For me, it's a good time for us to look at. Let's quickly, look at the chart here now. As I was saying, this is the candlestick. This is the candlestick. We'll now call out the T line let's call out the T line now. Sorry, the T line for you to look at what is happening. T line is a moving average, exponential 8. It's very important for you to look at it at any given time. It was going to help you to know exactly what is happening in the market. To turn this 9 to 8, 8 is what we use as the line. You can see the T line here, the blue line you are seeing here. You can see that as we speak that the market is below the T line. And this is where you ask question. If you have exited your position, you have to wait this for the market to see whether the market, you can see that from here to this point, market has been on what we call a sideways or a consolidation stage, which I've been telling you all this while. But until market break down the 47,000 mark, that's why I said at this stage you are seeing the market is in a distribution stage. After this, the markup stage of the market. Here, I see here is the accumulation stage. After accumulating here, you can see the markup here. Here is the distribution stage where profit taking and all is taking place. Another one is for market to start coming down. Once it break down, if for example market looking down, that's a confirmed market has entered the distribution phase of the market. But as we speak now, market is now at the distribution stage, which is the profit taking stage. Here, market is possible also to reverse up and start going up and break out this the resistance level of 47,613.72. Once you're able to break that up, that is to confirm another uptrend. While we speak now, market has started for this period, and you can see here that the T line is telling you that market is gradually becoming weak because it's across the T line down. Then if you bring the Bollinger band indicator, we're going to help you to make it clearer for you to understand where the market position is. You can see here, let me call other charts, other indicators for before I go back for investment. Let me call it the MACD and the money flow index. This is the MACD and the money flow index. Yes, you can see it here. They are already at this point. You can see it here that from here to here, market has been, the momentum here has been what? Very weak, very weak. You can see that. You can see the Bollinger band here when it blew out from this base. You can see volume, and you can see the market was trending. But sales are trending. You can see that activity until start break down here after coming down. But one thing that you want to look at the indicators that are below here. You can see if you watch this MACD is bearish as we speak now. But when you come down and look the money flow index, it tells you that even as the market is trying to correct or pull back as we speak now, funds is still under the market, in terms of buying activities. See, you can see from your MACD, your money flow index looking up at this point. Let's quickly look at it at a 45 minutes chart to look at what it's doing before we can move to another stock. But I'll look at it at 1 hour chart. Let's look at it at the 45 minutes chart now. This 45 minutes chart. If you can see that here, you can see clearly that this is the 20 days moving average for the Bollinger, and why this the blue line is the T line or trigger line. I see that the market is below it sharply. And here you can see if you look at this MACD here, you can see on 45 minutes chart, you can see that it's almost becoming bullish because it's trying to cross the red one from up. But one thing you can see that there's divergence in these two indicators. Money flow is looking down on what? On 45 minutes chart. Let's do that. As we speak now, the market is still very weak, but let's still watch what the market close today. But let's go back to our 1-day chart on the index. Quick one, we're going to look at Fidelity now. For us to know what is happening in Fidelity as we speak, let's look at Fidelity here now. Fidelity, to know what is happening in Fidelity Bank. Once you're able to get that, quick one, Fidelity Bank. Okay, Fidelity Bank. So we're looking at Fidelity Waco. Let's look at Waco. You can see the Waco. This Waco chart now to speak now. For me, you can see that Waco. See Waco movement here down here. You can see here that the the MACD crossed down when market can see that MACD has been below, but it tried to cross up here and still remain up. You can see if you look at it here, you can see that MACD is bullish on on uh, on on the on WAPO, which is a Lafarge Africa, and you can see your money flow is that means funds is entering the stock this morning. You can see it here. The way it's looking up sharply here, but still below 50. Once it crossed the 50, for me, it's a good sign. I can see that there's kind of another kind of resistance here. But once you break it out at the front continue, that is that Waco might continue to go up as we speak this morning. These are the things for us to look at. But if you look at Waco as we speak now, don't forget that with the blue line you are seeing, Waco is trading below the T line. Once you cross it up now, with this money flow we are seeing, it's a good sign for you to buy Waco again. Don't forget that Waco also their markdown date all is ahead. Then when it crosses the T line, you can quickly jump into the stock at this point because T line gives you signal to buy and also to sell. That is why T line is very, very important. And when you see T line and the index or the price action is far from the T line, you also watch at the time for you to also look at to take profit. That is why in the comment Australia, what we say, how can you sell stock, in bit to make profit? Not jumping out because there are some stocks that have given surprises in this market. There are many investors have sell attractively as the stock continue to rally. They start biting their finger, complaining that they ought to be in this stock because they sold early. But if you understand how to take profit slowly, you still be in that stock and you enjoying the rally. Even when they come to play that they remain stable, they are not changing because you know that you are watching your technicals, it's still very strong and the fundamental that brought the company to that level has not changed. Even when it is trending, you wait for another trigger to continue the uptrend because market stock feed on what on information, especially on earnings. Earnings is another factor that put market and it comes 4 times in a year. That is why first quarter, third quarter, and for this, anytime that we're approaching the end of the quarter, they are bound to be investing, in the market by the fund managers or the portfolio managers so that they can earn their, commission, comfortably at a good price. That will price go up. Also, don't forget that's end of the quarter. You also have position ahead of the results we're expecting, so that when results come to meet you in the market, these are how to trade, in this market. But with the help of your T line, once you see your T line, you want to know what is the earnings release date of the company you are expecting, so that you know exactly when to jump in and when to also jump out and take your profit. That's why I said in anything you are doing in this market, set up your stop loss. At the same time, you know your entry and exit strategy. Don't be greedy. Don't allow the market gyration up and down to be telling you. Let your word shape your plans, and your plans will guide you. I will tell you, you will reduce your losses. At the same time, your capital will also be protected. That is how to go about the market. For me, workload is very, very good at this time. If you are looking to take position ahead of the dividend, but if you're a trader, yes, you can still jump in at this hour, at this price is it now, so that when it come up, when the results come to the market, you are not waiting for dividend. But if you buy at this price of around 23 something, and results come and the first quarter also beat the expectation, and also don't forget that the sector has what we call fundamental news as well, also going to support that industry. For me, if you are in that kind of stock, you don't need to jump out quickly because there's something going for those that are in the stock. Yes, I said another one we want to look at. We want to look at fixing. I will still come back to the fidelity that did not come up. Let's quickly look at what is happening in fixing. You can see fixing price coming up. Yeah, this is the chart of fixing on a daily chart. If you can see straight from here, why I always look at the T line, it gives you information before you use other indicators down to confirm. T line, I told you, serve as what? Your signal, no trigger, either to sell or buy. It triggers signal for you whether to jump in or out. But you can see from here now, that see where the price action of fixing is far from the T line. The T line is what is the blue line. You can see it here. You can see it here. But as we speak now, fixing is trading flat on top of the T line. That means that fixing for me is still very, very strong. Even as it pull back from as high as almost 8 naira 36 kobo down to this plus, or 8 naira 50 kobo at this 7 naira 78, 7 naira 80 kobo is a good price to enter fixing, knowing that this company has not announced the result. And don't forget that the sentiment in that sector remains strong. You can see that the CBN have also extended their spiritual intervention interest rate from 9 down to 5 for another 1 year till next year. It's also a plus for them. And don't forget that yes, the Omicron has kind of slowed down because of every attention is on the Russia war and all those stuff. But I'll tell you, government is still planning to make sure that this healthcare sector is taken care of, so that our people can have access to what to good medical, which is good. And don't forget that Swixen has also gone far to partner with a lot of organizations, and also to kind of have access to key funds to do more. And it's a company that has a multiple product line For me, the fundamental is okay. If you look at the technical to speak now, technical for fixing is still very strong. If you look at it here, you can see it's trading flat on the T line. That means we're still very okay for you to hold your fixing. You can see at the volume traded here. When you see any green line above this black line, above the average volume. As we speak now, we're seeing improved volume in fixing. And don't forget, look at this your MACD here. This is the MACD. MACD is kind of bearish now. But if you look at this MACD histogram here, that's like the way it's ending down. And look at this blue line. Look at once it cross the red line off, that is another signal. We call it a what? MACD signal for that means you have to become bullish. But the good thing is that if you come down and look at your money flow index, you can see where it's looking at. It's looking up, and money flow as we speak now is above 50, really 51 or 52, which is also good for fixing. For me, fixing is okay at this time. The next one that we're going to look at is assets. Then we'll now come back and look at this fidelity, because I see potential infidelity also. Was we're expecting fidelity to hit the market between now and Friday. That means if you're in that position, just hold and look. This is a bank that released result and the market flogged this bank because of what they are relatively poor payout according to for me it's reasonable, because I said it earlier and I'll still repeat it here that this is a bank that has two kind of two face or two characteristics as a value stock and at the same time as a growth stock. I know growth stock anywhere in the world, they are not good in paying dividend, but rather they employ back their profit to what kind of expand. But because this bank has for a while building capacity, expanding like his tentacle to attract more at the end of the day, I believe that once the stock acquisition and now also they are heading to also a holding a company, I believe there's a lot of things going for assets. Only thing that the management of assets have to be become more transparent and more more conscious of costing costs, so that at the end of the day they'll still enough to pay investor. Yes, a bank that made about almost 4 naira 58 kobo 4 naira 58 kobo any per share, paying you 1 naira altogether. It tells you that those money that they retain earnings is for what? For expansion and investment, which also in the future investor will also benefit from it. You can see as we speak now that Access Bank is still the can see if you look at this blue line here, you can look at my blue line here, which is the T line. It just tested the T line now. For me, it's a good one. Just tested the T line here. Once you break it out, strong to buy, but because it pulled back from as high as 10 naira 40 people when they announced the result, we're trying to find level up after resisting the line. For me, it's a good one. But you can also look at your MACD. Your MACD is still kind of bearish in access, but move on is entering already. You can see that money flow is around the 66 to 67, which is very very strong for me for assets. It's a good one for assets at this point. That means these are the things we also want to look at when you are investing. I've discussed another. Let's quickly see if fidelity will come up now. I think I would love us to look at fidelity chart to see what is happening in fidelity. It's very very important at this fidelity. Sorry, fidelity back. Okay, let me see that I'll get the application. Yeah, this fidelity chart as we speak now. I will tell you this chart is very very sweet. I can see the strength of let me just show you something in fidelity now that I'm telling you I'm happy about, so that you can also see the same thing I'm seeing in fidelity at this point. can see Fidelity here. You can see this movement here. Fidelity, as we speak now, you can see that it's trading above the T line. T line, the blue line. See where it is now. Yes, yes, there's a little pullback after touching around the 3 naira 18 kobo yesterday, around 313, 315 now. But you can see the performance, you can see whenever it closed down, you can see, but you wait to buy when it closes up. But this is a signal, we can see here, we can see after seeing the line, you can see this bullish candle continue an uptrend. For me, Fidelity has strength, to even rally more if the numbers as we expect also beat market expectation. The good thing is that both the indicators and the price action are positive and was very strong. You can see the trend here are trading above, far from what the T line. You can see your MACD very positive, cross the red line from up, already a bullish MACD, and money flow remain high, getting as high as around this point. Let's quickly look at the 1 hour chart of Fidelity before we round up. Yeah, Fidelity on the 1 hour chart is still above the T line. Good. This tells you that the stock is strong. You can see volume is coming up gradually. No low volume this hour. This is another volume to be. But you can also see that the stock does slow down because this is just an hour chart. I believe that for investors that are also looking the work of Fidelity, I will encourage you hold your position. Traders that are putting position before now also hold your position to see the final number. Yes, you can say that all this while numbers that have been released to the market, they are impressive. The payout is high, but market is not right to it. It's just because what is happening globally, and also people trying to design the direction of the market. In the fixed income market, misdirection, the equity market, and also the general economy. We have seen the GDP for last quarter. People are trying to look at because the decision of CBN as at on Monday is just to make sure that this recovery is sustained. That's why it didn't try like to deflate the recovery that were registered or recorded so far. For me, the market is still in order. Let's just position. But I always say market is still in what in distribution phase. That is that people are taking profit. But once they break down the 47,000 mark, that confirm a decline stage. But let's watch. It's possible that market can reverse next week and break out the resistance level of 47,613.72 next week or before the week starts. Thank you and God bless you. See you tomorrow and enjoy the rest of your trading day today. Thank you for joining us today. Yeah, like always, you can ask questions through our social media. Also, we wait for the question and answer section for Saturday 12 noon. From 12 to 1. We'll be there also to answer your question from different professionals that in the platform also contribute to your question. Also, as I said earlier, just to remind you, try and mark your April 2nd for Investdata Masterclass. I'm telling you, don't miss it because stock that will help you to protect your capital with less risk will also be discussed, and strategies that you will apply this period of volatility being pre-election year will also be going to be discussed at the masterclass. Thank you and enjoy the rest of your day.